Welcome back. We are going to talk now about overconfidence in financial decision making. So, this is where we have all these people with a little bit of financial knowledge and they tend to do their own trading. So, how do these individuals actually perform in their portfolios? And we dug in. This was a study done by Odine, and this is out of California, studying about 60,000 of these traders and analyzing how they do just compared to the regular market. So we have these traders and they've been identified as overconfident, and they have three characteristics: overconfident traders. And this kind of paints the picture of retail investors, personal investors. And if we can summarize it into two words, they're called a sorry picture. And we're going to explain why they are a sorry picture. And we're going to continue to talk about this savings behavior in section 4, talking about retirement savings behavior and how to teach it and how to debias yourself and other individuals. So that is upcoming here. This, though, are talking about confident traders. And we find that these confident traders or overconfident traders trade way more. They trade more, so their portfolio turns over significantly more. They earn less, and not just a little less. This is about 6.5% less than the benchmark. On average, about 6.5% less than the S&P 500. So they're trading more, they're earning less, but maybe they have a less risky portfolio, less volatility. And obviously, if you have less volatility, that will lead to it, but at least it won't go up and down. Give them the benefit of the doubt. That's not the case. They're actually the least diversified. So what that means is they perform less. They actually have more volatility in their accounts than they should have. And they're spending a lot of time doing it, trading more. So obviously we're painting this sorry picture and realizing that if you can just be the market, be the S&P, then the diversification takes care of itself in one position. You don't have to trade anything. It's a set it and forget it, and you're going to earn the exact amount. So we found here that traders, obviously, we find that women do better because they don't tinker as much. And this is what we talked about in the previous video. And then there was a study from Fidelity Investments who did an analysis on who the best performers were for their stock portfolios and for their accounts. And they found two main characteristics of the best performers. And sadly, one characteristic was those who were deceased or dead did the best. And then that, thumbs up popped up. That wasn't me. Anyway. And then the other one was those who didn't know that their accounts existed or had forgotten about their accounts. I'll do that one. No? Anyway, accounts existed or didn't know their accounts existed. These were the best performers. So anyway, next, and finally, we're going to talk about analysts and excessive optimism. Analysts and excessive optimism. This is where, if you look at these analysts from different banks and different areas, we see there's something going on with their recommendations. Excessive optimism. And these analysts are, I'll show you here how excessively optimistic they are. I just pulled up three stocks randomly. And if you go to Yahoo Finance, you're going to see there are 5 categories where there's a strong buy, there's a buy, there's a hold, there's an underperform, and there's a sell. And each analyst has to provide one of these 5 categories. And so I just went and I found a couple of hot stocks that have been hot recently. And you would think if these have been on a roll, maybe the valuations are too high and we need to rethink whether this is a buy or a strong buy. But if I have something like Meta, who has been really performing well, I've got for Meta 21 strong buys, 34 analysts said buy, 7 say hold, 1 said underperform, 0 said sell. If I have Nvidia, another hot stock, I've got 19 for strong buy, 34 for buy, 5 for hold, and 0 and 0. And so once again, we're seeing a very rosy picture for these stocks that have had magnificent increases. And then I did a dog here. Intel has been beaten up badly and from a stock price perspective. So I said, okay, what are they saying about Intel? Well, only 2 said strong buy, 7 said buy, 33 said hold, 3 say underperform, and 0 said sell. And so I'm going to encourage you to go to Yahoo Finance, look at the analyst recommendations for the stock that you're looking at. And what we're going to notice already here is this trend of excessive optimism. And so what is going on here? Why isn't anybody wanting to step up and give somebody a negative review? Well, we have to sometimes think maybe it's not excessive optimism, maybe it's a conflict of interest. And so we have to somehow put ourselves into these analysts' shoes and realize that if you have an analyst that's looking at a company, these analysts have some conflicts where they have access to the C-suites. So they can talk to some of the executives of the company, learn more about them, see firsthand the operations and talk to the people involved around it. So they have this access to it. And so this is our conflict of interest where if you start writing bad stuff or giving sell recommendations, what do you think is going to happen to the access of the C-suite and the information that comes with it? Well, you guessed it, probably going to go away. Secondly, what about the relationship between the bank that the analyst works for, normally these are banks or research firms, and the company? Do you think when the company is doing a bond offering, $500 million bond offering for their expansion of their company, if you have an analyst out there writing sell recommendations, do you think they're going to do business with that bank? The answer is no. Once again, conflict of interest here, relationship between the bank and the company. We don't want to burn bridges. We want to stay strong. So again, why we're seeing some very strong recommendations here across the board. And then third and finally is the actual analysts themselves, thinking about their own career. If you're burning bridges here with all parties involved, at the company, at your bank, their relationship, their career could take a hit. So this is 3 explanations why we see this excessive optimism here, and that's why we probably need to recategorize these things if we even want to use this as a buy, hold, sell, and then these 2 have to be like run for your life. So anyway, that's how I could interpret that if I wanted to use it. That, my friends, is it for section number 3. I hope you learned a lot. If you have any questions, please let me know. I will post a review sheet of all of these things. So if you ever want to come back and reference what we've learned before and put it to the appropriate bias, because I know we've learned a lot of heuristics and biases, it's all going to be there for you. So we've made it to the end. Well done, and I hope you enjoyed it. Have a wonderful day, and I hope to see you in the next section.